Great. Thank you, and welcome to this webinar by Park Launch on a very important topic, stablecoins, Genius Act, and building the rails of the new financial landscape. And for those who don't know me, my name is Farid Khwaja. I'm the chairman of KTrade. KTrade is the most downloaded, most popular stock trading platform in Pakistan. And today we are joined by two really favorite experts in this sector. Hassan is the country director of Coinbase, and Coinbase, as most of you would know, is the most respected and leaders in this space. And joining him is Faisal Aftab, who is also I think, the most respected VC investor in Pakistan, and who has been an early investor and a proponent of digital assets. Very early. I know many people in Pakistan have been calling and talking about their involvement, but in the space, but Faisal has been much earlier than most, and but I will let him tell about more about that if he wants to. But I'm actually very excited about this because I want to learn about these two topics, and which is stable coins and Genius Act, and so much is happening in this space. So. What I'll do, Hassan and Faisal, if you allow that, for the first 30 minutes, I'll ask you some basic questions to understand what's going on. And then Ali Fahad will be sharing the questions on chat, and I'll pick some of those questions and put that forward to you. So I've already given a little bit of your background, but Hassan and Faisal, I know you have done so much. Perhaps we can kick off briefly with that, and then dive into the topic. So shall we start with Hassan? You're on mute, so we can start with Faisal. Um, if you want to add anything about yourself, but I'm sure most of the people on this call already know you.
Sure.
But I wanted
Let
more
me.
to in
I'll
terms
just
of
give a
your
quick
and, and
overview.
and Faisal, more in terms of I would love to hear more in terms of your involvement with digital assets. Of course, everybody knows you from Shark Tank and
Sure.
as or running Zayn VC, the top fund in Pakistan.
Sure. Thanks, Ali. So I'm Faisal Aftab, founder and CEO of Zayn Venture Capital. This is my second fund in Pakistan. The first one was launched in 2018. That was Zayn VC. My thesis when I moved back from New York to Pakistan in 2017, my thesis at that time was actually that we're in the exchange of value disruption. And when you looked at, and that's what part of the reason why I got into digital assets. Mine was more of a macro view that after the 2008 global financial crisis, central banks have started printing money, and that's going to lead to debasement. And then simultaneously, you had regulations like FATCA and FATF that were pushing for cashless systems. So, with that in mind, I looked at countries that potentially could be the next big thing, and Pakistan was identified as the next 11. Now, the whole thesis was that eventually cash will disappear, and you'll see Pakistan's actual informal economy come online. So exactly what happened in China in 2006, India in 2016 when they took out cash, and I think Pakistan potentially 2026. It seems like a lot of the laws that have been passed this year are accelerating that. So that was the thesis, invested in Pakistan with that lens. So and I've invested in a lot of the financial infrastructure that will eventually link to the digital assets element. And that's everything from wallets, both on the consumer side to the B2B business side, as well as a lot of the fintechs and lending infrastructure. So, it all converges, and it seems like that convergence is on the cusp of it. And again, for me, the whole investment in digital assets was about hedging. So the role gold and silver play, to me, that's Bitcoin is digital gold, and Ethereum and the alts are silver or poor man's gold. But obviously, Ethereum is much more substantial, and a lot of the other use cases and a lot of the other altcoins. So I'm not a Bitcoin maximalist. I believe it's a layer. It's the financial and monetary system being developed, literally from the financialized paper version or analog system into the digital system, and you can literally map each one of these digital assets or tokens to real world assets, as you've heard that term. I'll hand it over to Hassan because he's got a lot more interesting profile. So I'm very curious to hear from him as well. And by the way, I do love Coinbase. That's the only Coinbase is the only exchange I trust. It's the most regulated and safe exchange.
I appreciate it. Thanks for having me on. It's good to see everyone. I'm Hassan. I'm the country director in Singapore for Coinbase. Been in Singapore for about like 6 years now. Started Coinbase's Singapore office here and went through the licensing journey with MAS and are sort of operating a regulated exchange in Singapore for the Southeast Asia market. So it's been a pretty fun ride with Coinbase. We've kind of gone through one full cycle, within the walls of Coinbase. But even before that, my career spanned across some TradFi, some payments fintech, and then eventually kind of squarely into crypto. So I was at Merrill Lynch Wealth Management and Credit Suisse back in the day, an eon ago, and then eventually kind of switched over to move to Venmo, which is now owned by PayPal, but it's the largest social payments platform in the US. That's already where I got my first taste of, how to build tech-enabled products on top of regulated, financial services and entities, and how do you bring those two kind of things together. And then had also helped eToro launch their crypto brokerage operations in the US before moving over to Singapore. And then over here before Coinbase, I was with Gojek initially, running their strategy for their payments unit, and then had also run a crypto exchange out of the Philippines called CoinsPH. So have had a few kind of really fun and varied experiences, sort of all kind of in this tech and finance sort of adjacent areas. I think Faisal, like just building on top of what you were saying, I share the same view that I think we would all concur that nobody would look at today's financial system and say, "Hey, this is the best that humanity can do," and job well done. One analogy that stuck with me that I read about recently is that money should move like email. Instead, the way that it moves is more akin to cargo, where a bunch of payments and transactions sort of get aggregated and bashed up, and then sort of they get like shipped off to maybe a correspondent bank, and then they get literally offboarded one by one until they make their way to sort of where the ever the last mile distribution is. Whereas, this is a digital kind of information packet, and the way it really should move is just in a much more seamless peer-to-peer kind of way. And there's all these kind of intermediaries and overhead costs that like come along the way that then price people out of participating in the financial system. So I think blockchain really is the kind of financial technology of our time, and I think we're all very fortunate to be sort of living through it, and hopefully many of us participating in it. Of course, sort of AI is the other kind of big mega wave, and we can talk about that separately. But really, kind of as far as like moving and storing value goes, I don't think there's any more exciting place to be working in. And so I think with all the recent developments that we've had that we'll dig into, I think it is finally our time to be able to accelerate all the really kind of incredible ideas and work that so many people in this industry have been working on and are chomping at the bit to really kind of get this out in the wild.
No, indeed. Hassan, why don't I continue with you and would love to know more about what is this Genius Act and why is it so important for the adoption of stablecoins?
Sure. So Genius Act in itself is important, but I think what it represents in some ways is really kind of the meta of it. So one of the huge holdbacks for the whole industry, really, for at least sort of 8 years, is this notion of the U.S. regulatory overhang, hanging like the sword of Damocles over the whole industry for a long time. And because the U.S. just has so much influence, even if you were not like directly on US shores. Most scaled companies were just not willing to take any franchise risk on crypto and blockchains and stablecoins because they did not want to, carry any nexus with the US SEC sort of knocking at their door and, slapping a lawsuit on them, or just even, bad sort of PR optics coming their way. So that's something that the whole industry had to kind of really suffer through initially, and then eventually learn how to sort of push back on and really, use the kind of jurisdictional and just legislative foundations in the US to be able to push back on regulatory overreach. Especially in the last administration, there was just a sort of, to say it directly, I mean, there was an unholy alliance between Elizabeth Warren and Gary Gensler that was aiming to push the entire industry offshore out of the US. So the industry geared up, sort of lobbied and advocated pretty hard. There's 52 million crypto holders in the US, and so when it came time for kind of the actual sort of political momentum around it, I think we just saw like sweeping success, not just at the administrative level, but also at the House and Senate level as well. And so I think fast forward to today with the current administration really just having a explicit policy that the US wants to be a global leader in both crypto and AI. They have moved extremely fast on both reversing some of these opaque policies from the previous administration and agency, but also just moving very quickly to aggressively start taking share in the industry. So coming to the Genius Act, right? So what is it sort of actually and technically? It's effectively the first sort of legislative framework in the U.S. That addresses any part of crypto and provides a clear regulatory framework for how to operate. In this case, specifically for stablecoins, it sets clear rules of the road for what does it sort of mean to be able to issue stablecoins, and then what are the requirements that are associated with it. So some of the core principles around it are that the instruments that are backing it need to be liquid and high quality. There needs to be transparency around sort of reserves, and then there's additional sort of protections that stablecoin holders will get to enjoy as a result of this act. And I think the final thing I'll say around this, and Faisal, I'll turn it over to you, is the key thing about this also, because in the US, like these wheels kind of turn slow, but once it's enshrined, the next administration can't just sort of go ahead and like overturn this or reverse this. Now it's sort of baked into law. So unlike something like an executive order, like this provides the foundation and clarity for companies and institutions to take long-term investments and really start, building out the next phase of deployment for stablecoins.
I thank you for that, and I'll come back to you with some more follow-on questions to the points which you made. But moving to Faisal, and it's also linking with the questions which have been asked by Hafsa. And then Faisal, you have been talking about a lot of these trends for since a long time, which is about replacement of SWIFT and the role of digital assets for payments. So does this bring us closer to that? Will stable coins be that mechanism which will be used for cross-border payments? What are the other applications do you see? Do you think it will help financial inclusion in Pakistan? Are we there? And then I know you have been talking about this vision for the last, like, since the time I know you, I've been hearing this from you. So are we there now? You're on mute. You're on mute.
There we go.
Yes.
So yeah, no, so I think we're there. I think the timeline moved up for me. I thought this would happen post 2027. So the Genius Act is a huge milestone because that just accelerates the adoption. Things were already happening at the Bank of International Settlements with the mBridge project, which is built on Ethereum for settlements. The central bank digital currency pilot projects in Europe and China, as well as in some of the Middle Eastern countries. Pakistan has also been working on one quietly, just exploring it. Not with it's just in the initial stages. I guess just for the users, because I'm sure we have all sorts of users. What happens is that we tend to look at things in isolation, but what we have to look at two things happening. One is history and macro events of what is the current monetary system that we use, that we're in, and how it's evolving and how it's changed multiple times in the past. And the second element is that the disruption that's happening with technology, where everything in the real world, in our world, is being built in the technological world. So I'll talk about the first layer, which is technology. It's easy. So when the internet moved, it moved in protocols. So you had your TCP/IP layer, which is data. Then you had voice over IP. Then you had video over IP, mobility, and multiple other iterations. Now, money has to catch up with the speed with which the internet's moving and commerce is moving. So if I want to call you, we can do it via Zoom, WhatsApp. There was a time when it used to need calling cards a long distance. It was hurdles, right? Similarly, I can basically, buy things. I can communicate with people, but if I want to send you $5, I have to jump through multiple hoops. Let's say if it's cross-border. So velocity of money has to catch up with the internet, and that's why I refer to as the exchange of value disruption. And that protocol there is blockchain. So whether you look at Bitcoin, Ethereum, because money itself has multiple layers. There's currency. Money is gold and silver, actual hard asset. Then you have currency layers, which would be the currencies like the dollar, the rupee. That's where stable coins come in, or central bank digital currencies come in. And then you have multiple other iterations built on Ethereum, Solana, Avalanche, these layer ones. That's where you're going to have bonds and real world asset tokens like your NFTs that are nothing more than your real estate records sitting at with the government or municipalities. So that's one element. And I'll converge this into the Genius Act, how that changes everything. Then let's go back to quick history, right? So the current system we're living in started in 1945, which was Bretton Woods 1, where the US dollar became the reserve standard, backed by gold. And it was literally redeemable to gold, so you could walk in. So dollars the currency, and gold was the actual asset that the currency was printed against. Then we had a reset in 1971, where Nixon delinked from the gold standard, and then from there we went on to the debt-backed monetary system, which is also backed by a commodity, which is the petrodollar. Where when I say the petrodollar, it's just that the countries that sell oil accept dollars, so that creates demand for the dollar. Now, fast forward to today, what's happened is that post 2008, after the global financial crisis, all developed central banks that were on the SWIFT system. And the SWIFT system, for those that don't know, is the system that communicates between the banks. So when you send money, let's say for your tuition from Pakistan, parents, they have to send it via a bank in Pakistan to the US or UK, wherever you're studying. And there's only 4 currencies accepted on that. So that's a lot of power for trade and demand for your bonds or money, which is the euro, the pound, the dollar, the euro, the pound, and the yen are the main currencies that are accepted on that. That's an analog system, takes about 5 to 6 days for settlements. So that's what blockchain is going to be updating. And so now coming and then obviously post GFC with the printing that started with all the central banks, we've all seen inflation come into play, which means that we can't endlessly keep printing. Where even in the US, the main debate right now is that debt to GDP ratio is 120%. That needs to be adjusted, because historically, whenever a nation hits 120% debt to GDP ratio, only about 2 to 3% of them have actually made it out of that doom loop. That's not to say that with AI and technology and exponential growth that we have, we can't escape that in the US. Now, that's coming to the Genius Act, which is quite interesting. I mean, it caught me off guard that, I mean, I'm sure Hassan knew, because the crypto industry was lobbying prior to Trump's election. But the passage of this, and Scott Bessent specifically, the Treasury Secretary, these gentlemen are very forward-looking. So I think what this moment was very historical. When we look back in history, it would be something similar to the Plaza Accord that took place in 1985, which was again when you were running into these bond issues when US debt was at 20%. Yield was at 20%. So a lot of that kicked in. But what this does is very significant from a macro perspective. You've got countries that are de-dollarizing from US bonds because of the yields they feel are too low, and also because of geopolitics. So suddenly what we've done is, it goes back to the greenback from the 1900s, where private institutions, regulated, could issue their own money backed by either gold or the US bonds. It's really the US Treasury or gold that are the two collaterals in this system against which you issue currency. So what this does, and again, to bring it down to more for the audience, so Meta could potentially be issuing its own digital dollar in the future, or Google, or any of the platforms that we engage with. And the whole structure of how we engage with the technology and how we earn money could change based on that. And what that also does, it goes to, for example, it goes from dealing with 180 plus odd countries and playing geopolitics there, to potentially putting 8 billion plus people that can create demand for the currency. So it's very interesting times that we're living in. And so for me, the Genius Act is quite interesting from that perspective. And then obviously we're looking at the integrations for remittances and all the use cases that come in as Pakistan starts to regularize and regulate blockchain and digital assets. I'll pause there and give it back to you from that. And I'd love to also talk about to me, one last thing I'll close it with AI and blockchain are intrinsically linked. The two blockchain is what's going to make AI thrive because it is the repository where financial data authentication and your KYC, ML, CFT, and the whole component and machine-to-machine payments is going to take place. So the two are intrinsically tied in scaling. So don't look at them as separate industries.
No, and I want to follow up with you. You touched on the applications in Pakistan. Would love, and then you have a broad portfolio of fintech companies, including KTrade. Where do you see the role of application of stable coins across your portfolio? You know, you're involved in lending and all kinds of fintech applications. So how does stable coins play a role in those?
Yeah, so I mean, Pakistan's, I mean, I call it the best kept secret, right? It's one of the most undervalued assets on the planet. We have a massive economy that's not really digital, and it's cash based. So the use case for stablecoins, the most prominent one, is going to be for cross-border remittances. Specifically, in Pakistan's case, our remittances play an important part in our economy, in terms of expats living in the US and Middle East and all over the world. So that would be the disruption of and then obviously the export component with the freelancers that are earning abroad. So the integration of wallets. So the wallet I've invested in is NayaPay for on the consumer side. You're going to start using stable coins for termination of those with the regulated at the central bank layer, and the reserves would stay there, and then eventually you would convert it into fiat rupees in Pakistan. So it would originate in dollars or AED. So UAE's also launched their stablecoin. I think it's AEDT. So let's say the workers in UAE are going to send their money back, and via NayaPay, SadaPay, Jazz Cash, any of the wallets, eventually you'll see them terminate into rupees. Right now, what happens is they have to do it in a different kind of a reverse hundi way, where you send the stable coin, and then there's an open market spot exchange where families have to convert, and it's a genuine use case. So Western Union, the spread that Western Union and all the other remittance services, not to target Western Union by any chance, by any means, it's too high. So again, the fees also come down when you move to this more efficient technology, as it did with WhatsApp. If you compare it to long distance payments that you had to do for communication. So that's one of the most prominent use case. Then there's other use cases where we have a lot of FMCGs because of the volatility in the currency. There can be domestic stable coins that are a mix of treasuries, Pakistan treasuries. Right now, they have to convert their dollars that they send to rupees. So you can create, some sort of mechanisms there as well. So there's some use cases there where they can keep a portion of their reserves. And again, keep in mind that even the stable coins, or many of the assets like Ethereum, they're competing with treasuries to quite an extent, even though it's a layer, because all of them offer yield. Ethereum specifically, and even some of the other tokens, and even with Bitcoin, you can extract indirect yield through lending it to various setups that are out there. And I think Coinbase has a fund as well in the UAE. So these are I mean, the structure of how we invest and the financial structure is changing. And so, when they say the fintech disruption, a lot of people missed out in finance that it was the same as when what voice over video over IP did to television channels, where Netflix and YouTube are pretty dominant versus ABC, NBC, and CBS. It's the same thing happening. A lot of the smart people in finance moved to fintech very early, and blockchain is the core of fintech. So I'll end it with that in your response. And obviously, of
Thank
course,
you.
for your last question, sorry, I forgot to mention, the more we go cashless, by definition, everything is documented. This is like each one of these payment, even the digital rupee is basically everything is tracked like your bank account, right? And so the taxes, everything goes up because everything can happen in real time, especially once you deploy the AI layer.
So it becomes more efficient. Hassan, moving over to you and lots of questions, and we need your insights into how can we participate in this big opportunity. I think Coinbase being the biggest and most respected and the flag bearer of this industry. And Faisal talked about remittances use case. You have been close to that use case with in your previous roles in Philippines, and so is that a big opportunity? How can we participate, especially vis-a-vis Coinbase? I noticed that people have asked that question to you on chat as well, and you have responded. So, but we would also love to hear more about that.
Yeah, well, because of again this regulatory clarity, that this whole space is sort of blown wide open. I think even more than the past. And I think one other just dimension I want to add to this, along with regulatory sort of clarity, one of the other big unlocks that's also happened in the last 4 years is that blockchain scaling has really improved tremendously. So I think many of us are remember trying to transact on Ethereum mainnet and maybe costing like 70, $80 when there was like a other side NFT mint going on or like something happening in a different part of the ecosystem, but that just causing kind of gas spikes through the whole chain because it was capped at 13 transactions per second. But because of layer 2 scaling approaches on Ethereum, as well as other performant alt L1s like Solana and others, I think we've just come a very, very long way. So we've already had our dial up to broadband moment on blockchain infrastructure. I think most transactions now can sort of run at like sub-second, sub-cent, throughput and rates. Even on our blockchain, which is called Base, which is a layer 2 on Ethereum, we were at 2-second confirmation times before. And then we've added a new, again, this kind of infrastructure upgrade called Flash blocks, which now allows for transaction confirmations at 200 milliseconds. So it's a 10x improvement. And I think what the observation on this is that as you provide more high quality throughput to developers and users, the amount of consumption, continue to goes up. And I think on messaging and communication, Faisal, you referenced WhatsApp, and one analog from the communications world is, there was a time before TCP/IP was sort of scaling, and this we're in this dial-up era where people were transacting or like communicating at like this sort of roughly at this level of like 2 to 3 billion messages a day, and people thought, oh, maybe that's as much as people want to talk to each other. And as broadband got better, like even just WhatsApp alone does like 25 billion messages a day, if not more at this point. So I think as we are increasing capacity, we're going to continue to see more and more use cases really start to become feasible, and just sort of more experimentation, that's going to happen across the ecosystem. So in terms of direct participation, I think there's so many different ways, right? So I'd say, just even starting with like on-chain, which is much more sort of permissionless and open access. Really, I think anyone can, sort of get started. Like, yeah, there you can start out by, buying or converting your first stable coin. I think there's many different ways still to just even earn, crypto in many different ways. Like it's almost like sweat equity. You can go and participate in DAOs or different projects. I think Web3 gaming was very popular at one point, and that had this whole like play to earn moment. Some version of Web3 gaming will resurrect at some point, but it might not be as crazy as it used to be. But I think what's more fun to me is really starting to kind of get your hands dirty and sort of building in the space, especially with Claude and just Cursor and just so much AI tooling, like making regular people into coders. It's very easy to just even vibe code like Web3 apps and play around with it. I think some of the fun parts that we're about to see around stablecoins is, now that you especially don't have to maybe deal with speculation and volatility, you can really start to focus on, again, what does this transfer of value look like? And just I think the composability aspect of crypto is still like underappreciated. So, things like how do you bundle in, some kind of like, yield components into your stablecoin, for more, institutionalized use cases, how do you bundle in compliance and KYC, to add on to like verified pools or permission pools to do, even more fun things like tokenized equities and whatnot. I think those are all being cooked, as we speak, and I think we're going to start to see many of those use cases come up pretty soon. And then I think just on the institutional side, like, we're just seeing this explosion of announcements. JP Morgan is launching their tokenized deposits on Base. Citi came out with their stablecoin strategy. Bank of America is talking about it. Walmart and Amazon have said that they're going to be doing their version of stablecoins. Stripe is doing kind of a lot of things, both in stablecoins. They're probably going to roll their own, and they just announced their own layer 1 as well. So all of these companies see the size of the prize, and some of it is just like finance and fintech, and some of it is like, literally M2, and just sort of, how do you move that on chain? people also have seen like the outsized profits that Tether has recorded. And I think they also believe that there's, as competition intensifies, and we're still in early innings. So some of this is like crypto level distribution. I think we're about to see like, what mainstream scaled distribution is going to look like. That they believe that they can really, come in and just, capture a lot of that economic value for themselves as well.
So Hassan, I have some more follow on the points which you made. You mentioned banks like JP Morgan planning to launch their stablecoin on Base, which is the layer two owned by Coinbase. How can other or people listening to this call or Pakistani institutions, how can they do this? And then how does somebody launch a stablecoin on Base? Can you guide us on that?
Yeah, so I think the JP Morgan point really is, I think it's just to illustrate that, this is just becoming so mainstream that even tier one banks again or G-SIBs are saying, look, there's no franchise or very low franchise risk associated with this anymore. I think it's safe to kind of wade in. So I think that gives a lot of air cover for, again, like fintechs, even, more traditional banks that are maybe examining this technology that, hey, this is maybe a good time. Maybe I should sort of think about this more seriously. I think for more individual participants, look, it's permissionless. Anyone can roll their own stablecoin. It doesn't mean that, you should or might like get off the ground. I think it's great for learning. But one thing I do want to call out, I guess, on some of the questions is, what about like non-USD stablecoins? Perhaps a PKR1 or the UAE one, et cetera, et cetera. So the way I think about this is sort of it's the theme here is like this rise of on-chain FX. And the thesis here is that if you look at traditional FX markets, USD is still dominant, but it's I think it's about like 80 to 85% of transactions are settled on USD. And then USD reserves are about like 65%, of global reserves at this point. But if you look at like on-chain stablecoin TVL, it's still like 98% USD stablecoins, if not more. So as crypto and, or stablecoins and traditional FX collide, you should expect to see on-chain markets start to, harmonize towards what traditional or mainstream FX looks like. So what about like the G7 currencies and everyone else? I think that there's a few kind of ecosystem sort of coordination issues that like people have to solve through. I think the biggest one, even from my experience from CoinsPH at that time was that the slippage for kind of long tail currencies was just prohibitive. And so you have to figure out how to incentivize market makers to, come on and make these stablecoin pair markets so that it's feasible for them as well. It can support their business model. And then you have to get like exchanges to adopt and all the reg frameworks have to work and the L1, L2s have to work and all of that. So we've kind of knocked out, I think, 3, 4 of these kind of big gating factors. Where a lot of the energy right now is like folks like Cumberland and others are really taking a serious look at this market. And I do think that just the force of gravity of arbitrage across sort of exchanges, like once these stablecoin pairs start coming online, there will be savvy market makers that will just start arbing between mainstream markets and on-chain markets, and we're going to start seeing liquidity go slowly and then just very suddenly. And I think folks who are going to get themselves ready for that moment or start kind of front running this just kind of opportunity, I think are going to be pretty well positioned.
Thank you. Moving to Faisal. Faisal, what's the risk of dollarization with stablecoin? I think you spoke and you have been writing about the risk of US printing a lot of dollars, but isn't stablecoin essentially an acceleration of that because now dollar will be multiplied by even private actors? And secondly, linked with that, what do you prefer? Like countries like Pakistan, should we see more rupee-based stable coins, or will it be dollar-based stable coin?
Sure. So, so look, there's two choices that countries have to make, but eventually they lead to the same path. One is basically the stablecoin path, which the US has clearly chosen, which is basically there's still a demand for it's a tight band the way it's structured. It's the Federal Reserve, the Treasury, and then private institutions that are issuing stable coins. So they're rather than issuing currency themselves, they're using private institutions. But the requirement is a 1-to-1 reserve requirement with cash, which is the dollar. But that really means that the treasury, short-term or 10-year treasury, ideally, but depends on your treasury function. So that creates the demand for the dollar within their economy domestically, and people will then start to use these to transact, so that the volume increases and that creates more demand. So that's one element. The other one is the central bank digital currency route, where basically the issuance of currency happens now from the central bank, which is what Europe and China are doing. And that was one of the plans from that was one of the proposals in the US, which was basically the FedNow platform, right? But FedNow is going to integrate with banks directly, but not issue the currency. So that's the two, just to kind of clarify what these two paths are. But eventually they lead to the same. It's a highly traceable form of currency, which makes basically measurement of GDP down to a household in real time. But you have to imagine a world with no cash, right? And everything payment is ubiquitous, like what it is, it's like in China and India now pretty much as well. So it can be done pretty easily. So at that point, it gives governance and monetary policy an entirely new tool. So for a use case within that, I'll explain, would be like with this floods that happened, right? So you could literally airdrop government stablecoin or government currency down to a district to individuals in their wallet, and it gets straight to the source versus distributing it and then having siphoning happen, and the money never makes it to the root cause, right? So there's profound use cases and positives and negatives. Obviously, the negative side is mass surveillance. It also gives governments the ability to surveil everyone, and your financial data is probably the most amount of information. They can. It's very easy to identify if I say in my health insurance I don't smoke, or not health insurance, health insurance. Yet I've been buying packs of cigarettes on Foodpanda. So I think things like that. Once AI kicks in, financial data is the most important data point that we're heading towards. In terms of Pakistan, look, what you were saying in the dollarization and debasement, right? Ultimately, all currencies, whether they like it or not, are pegged to the dollar because that is the base instrument. It replaced gold in 1971. And so from that perspective, unless you have commodities in the ground, then you have significant hedges. But most countries are. And the main reason is because we all have to trade in dollars primarily, and some of the other currencies. So that debasement is going to continue to happen. So if the rupee is 280 rupees to a dollar, I keep saying to people that we always think that the dollar is strong, but it used to cost 1 penny to buy one US penny to buy Bitcoin. Today it's $115,000 today or something to buy. So the dollar is also devaluing against something, right? It used to be gold, and gold was, for example, $200 an ounce back in 2000. Now gold is $300 and $3,500 roughly, give or take. So that debasement element is going to keep happening. It's really the reserve currency is really what determines the dominance of what a superpower is. I mean, to be a superpower or an empire, you have to have large landmass, a significant population, and your currency. I don't think that's changing anytime soon. So it is going to, the only thing that's going to improve for Pakistan, let's look at it from another way. So the structure remains the same, but there's two risks, and I think our regulators have to be I like the fact that they're moving very fast because you can't ignore this. And in history, I've said this to them: you don't want to be PTA to WhatsApp and Zoom, the Pakistan Telecommunication Authority. You don't want to be PEMRA, the Media Regulatory Authority, to social media and your YouTube and Netflix, but the eyeballs have shifted there from your domestic content. Not that I'm saying there's anything wrong with that, but they should have proactively regulated these guys and given them domestic licenses versus trying to put a firewall subsequently. So in the same way, you have to treat this disruption and grab the bull by the horns and adopt it, and then identify the use cases. Otherwise, your population is going to start to adopt these stable coins, and it is impossible, no matter how many layers that we try to protect, firewalls we put in, to basically stop people from getting airdrops and transacting in these currencies, especially once Starlink and the satellite data starts to kick in as well, right? So we have to, all these things are interlinked. So that's one element, but the positive element of this from the government's perspective is that one, you can now basically take hedges and exposure. Ali, you've talked a lot about that, right? So in the form of one is Bitcoin mining, and now you're basically setting up getting an asset on a weaker currency, converting it into, even if your IPPs have guarantees, a lot of that capacity payments are going to, we have to pay them even if we don't consume it, right? We have excess energy capacity. So converting that into a stronger currency, literally you've been given the ability to like mine gold in a digital format. So that makes that's a huge asset. The other one's obviously building up a reserve. So you can take your existing, start, we're printing money anyways, all of us are, we all have to when the reserve currency prints. So you can also basically start to build reserves in Bitcoin and Ethereum. And again, the reason why I'm a proponent of Ethereum is not because it's just personal. I do it like a use case element. Ethereum is like I used to be in my consulting days, SIAC, which is the back end of the New York Stock Exchange, was one of my clients. So what you realize, and a lot of the investment banks and asset managers, what you realize is they don't like to, because it's money and finance, they don't like to change and upgrade their systems. So when you go in there, you see a lot of companies still using, or at least at that time, this was like 10, 15 years ago, AS400, Cobalt. These are like very distinct programming languages that are not mainstream, right? So Ethereum is being adopted by Wall Street because that comfort. And I think, and Coinbase I consider institutional at that level because it's regulated in the US. So you can see what Coinbase has adopted as well, right? So similarly, that has a use case. There's a yield there as well. There's lots of interesting use cases here that for Pakistan as well, and globally.
Great, thank you, and also thank you for that, mentioning of the bringing up Pakistan's regulatory initiatives, and I must give a shout out. I think they're doing an amazing job. It's important to focus on this topic because, as you rightly said, that you can't ignore it. It's a reality. It's what the young people of Pakistan are already operating in it, and with easy access and Starlink, you mentioned that, like you can't stop it. So it's important to have regulation. And I think the activism which we have shown has brought in a lot of attention to Pakistan, and a lot of the top
Yes.
companies are exploring, looking, and interested in Pakistan. So I think it's great to see that kind of energy, which typically has been lacking with Pakistani regulators. Hassan, moving on to you, and I have been asking some of the questions that people have put forward, and a lot of questions are around trust and around the risks. And people are talking about or mentioning about Luna, which and USD, which was a stable coin which collapsed. Um, how do we ensure trust in stable coins? What's backing stable coins? Can just anybody launch a stable coin? Faisal said it has to be backed one on one, but how do we audit that? And lastly, the two main ones, USDT and USDC, can we trust them? Are they audited? Are we sure that they have one-on-one dollar backed to the currencies which they have issued? Would love to get your views on this element around how do we ensure trust and how risky are they?
Yeah, trust is even more than the rest of crypto, a huge cornerstone for stablecoins because relative to other volatile assets and maybe programmable assets, stablecoins should be boring. They should be really just have kind of one jobs to be done, which is, hey, can I redeem this stablecoin one for one for the underlying, as and whenever I want. I think that that is what the market sort of really sort of wants around these stablecoins, and that is what builds up trust over time. And some of it really just has to be earned and kind of accrued. You can't sort of buy it, so to speak. So I think that so yeah, just having sort of that trust is important. So I think there's a few different ways to kind of get at it, but really with financial services, having some sort of regulatory framework that like companies that are issuing stablecoins have to abide by, and then them sort of subjecting themselves to that supervision, can provide like for the general public some level of assurance that what is backing these stablecoins is indeed there, and that's sort of really what the Genius Act sort of says, right? It's that it should be backed one for one with high quality and liquid assets. There should be transparency and regular publishing of reserves. and there should be reasonably fast redemption, so to make this whole market function. And so these principles are pervasive, like because it's common sense principles. So even in Singapore, the MAS has this framework called single currency stablecoins framework. The Hong Kong sort of has issued one recently. JFS in Japan has one. The UAE has one. I think everyone's sort of converging on the fact that stablecoins, like as a segment of crypto, is going to be hugely important, and they want to issue these fit for purpose licensing frameworks, for stablecoins. Now, like when it comes to sort of semantics and labeling, I think that because there's no sort of standard per se, many tokens do try, attempt to call themselves stablecoins. I think Terra is, now a little bit in the past. Hopefully, that was some version of an algorithmic stablecoin that was, attempting to use smart contracts and just kind of, market corrections and artificial yield, frankly, to stay within a certain range. It was an experiment. Frankly, the experiment never should have gone as big as it did. But it was also, the irony is that it was, it was there, like it was all transparent for anyone to see that, look, at some point, this is going to be like a life of a turkey, that at some point it will just sort of, go to zero. So I think we're moving on sort of, from that stage. And I think at this point, the market has converged on, regulated stablecoins as most likely the thing that is going to stay on and move on. I will say that there are other flavors of stablecoins that are like coming around, which again, something like an Athena really is like more akin to like a tokenized money market fund, which uses basis to kind of generate yield while sort of keeping itself pegged to a certain number. In this case, they've just chosen to peg it to $1 to make it just sort of easy to understand. So it's an exciting innovation, and I think it's interesting in and of itself. But something like that, again, like, I see it being valuable. I don't really consider, what one might want to think of as a stable coin. But, these regulated stable coins, I think, are just going to be what people will most likely going to use for these financial use cases. For USDC and USDT, I mean, for USDC, look, I mean, even Circle's sort of public at this point. You can inspect the BlackRock CUSIPs, that like back the reserves for USDC. Coinbase is the preferred distribution partner for USDC. We're public and all of our stuff is audited as well. So I think that obviously kind of goes a long way in terms of, again, just continuing to build trust in this specific product. Tether, had a head start on the whole market, and they've done a tremendous job on just kind of, especially with Global South retail, just having a very kind of pervasive product. And they did, to their credit, they did provide like financial access, I'm sure, to many users that just would not have been able to access this bearer asset. I think there's questions that, still get asked. I think they will figure out perhaps a way to eventually kind of play ball, but I'm not close to that team. I don't know what they will sort of eventually decide on is their strategy. But it does continue to be the biggest one at this point.
And another follow-on question which people have asked, or rather two, is that China has not been supportive of the whole space. I mean, they've banned digital assets, and so how do you see? Do you see that as a risk for the broader ecosystem? Do you think that other countries can follow China's strategy, or do you think that they will follow the US? And then if China is concerned, why is China concerned? Are those legitimate reasons? And lastly, there's a question about cyber attacks and vulnerability of this whole infrastructure, which is a question for both of you. So Hassan, would love to get your views on China, because you're close to Asia Pacific, and China has a lot of influence on those regulatory geographies. So would love to get your
Yeah.
views on.
Yeah, and in some ways, Faisal might have a better articulation on this, but let me start. So I actually think where this really sort of stems from is more a kind of foundational sort of level of like, communist principles versus sort of capitalism and the way that it's conducted in China. So even if you put crypto aside for a second, if you just look at like what happened with the tech ecosystem and maybe other sort of verticals like the education vertical and entertainment and whatnot, I think there's just a very specific set of social policy objectives and economic objectives that the CCP just wants to sort of keep in place. in sort of, in a view of what they believe is best for the long-term interests of the country. And I think with crypto, where like, I feel like it went off the rails is, it just because again, like it's fairly sort of speculative. There's a lot of volatility. I think it was just getting a lot of disproportionate attention, both in terms of capital allocation, then some capital outflows, and then bad optics around like bad actors in the space, particularly sort of coming out of mainland and mainland adjacent, that they just had to kind of clamp the whole thing down, I think is sort of where it came out. But today, like the way that it's sort of being kind of balanced out is, about 2.5 years ago, Hong Kong then, issued its own licensing framework for crypto. So there was a Hong Kong Fintech Festival that happened 2 years ago, and there are actually a number of CCP representatives that were kind of on stage as well. And it was effectively sort of a little bit of a tacit endorsement that, look, we're okay to allow this, in Hong Kong. And there's certainly a lot of kind of capital flow, between mainland and Hong Kong. And I think they're keeping that as sort of a way to allow, some level of activity and regulated activity, while sort of, having kind of effective controls and being able to kind of, just calibrate as they see the industry evolving. So that's a little bit of my hot take on where, what happened in China.
And on cybersecurity vulnerability, any comment on that?
Look, I think all financial infrastructure, needs to have resilient cybersecurity. Obviously, blockchains are just newer and they have some kind of very specific properties. The most kind of critical one being that, transactions are immutable. So if you lose your assets or if they kind of move off of your, wallet, like it is just hard, or impossible to recover it. So I do think that, this is an extremely kind of important area, both at a wallet security level, smart contract audit level, and just kind of adjacencies around like, DevOps and what the middleware infrastructure looks like. We've had way too many, hack incidents in the industry, in the past. But I will say that, for even for us in Singapore, for example, the MAS, has a specific technology risk management requirement for digital payment token service providers. And it's, at par with, what like most fintechs are subject to, and some elements that are like what banks are subject to, as well. And then there's kind of idiosyncratic things that we just have to solve for. So those are, roughly kind of, global standards around cybersecurity, that are being kind of worked on across a bunch of standard setting bodies, and expect those to kind of, really become industry norms. But at the same time, like everything around security is a cat and mouse game, and it's just going to continue to, move back and forth.
Thank you. Faisal, extending the same question to you. So Hassan said that, China was worried about capital flight and there was volatility in digital assets and there were also scams. So those three reasons, capital flight, volatility, and scams. And that's why they banned the whole thing. Uh, how will Pakistan deal with those three things? And then if there's capital flight, our rupee will go down. If there's volatility, people will lose out money. There will be noise. And if there's scams, there will again be implications for that. So are we closer to China or are we closer to the US where we don't have to worry about these three things?
We're obviously closer to China. We have capital control, also does China, right? And it's just human behavior, very simple. We can talk about debasement, but the reality is that all of us still transact in dollars or pounds or euro, right? Primarily. But when we're talking about individuals ourselves, so if we were given the choice, we would save in those currencies today in the world that we're in. So similarly, the human sentiment, even in China, was that people wanted to take capital out, buy apartments in Canada and all over the world, right? Same behavior pattern, pretty much all over the world. So I think what was happening with China, the flight of capital was so immense, even though they have a net balance of trade, their balance of trade is immensely positive, right? But when there's so much capital is going out of the country, it does stifle domestic growth and domestic investments. So I think that was one element of it. But I think the bigger element was also geopolitical. The geopolitical element was that, look, China, after the 2008 financial crisis, China was meant to grow the world. It was kind of an unsaid agreement between the main players in the world. China grew the world out of that crisis by creating growth and by excessively printing money as well as basically making things cheaper, right? They were expecting in 2016, that's partially where Brexit happened as well, to be included in the SWIFT system. The agreement was that, hey, we'll also add the renminbi. If you actually go to the IMF website, the actual currency that we all borrow in is called Special Drawing Rights, SDR. That actually determines, and there's a vote every 5 years. Interesting, geopolitics is linked to plus minus 1 year of that vote. Again, it just could be a coincidence, but it's an interesting pattern recognition if anybody wants to see. So in that vote, if you look at the basket, actually the strongest currencies in the world right now in terms of world trade, the number one is dollar, number two is euro, and number three is renminbi. And then you have the yen and the pound that are just squeezing away. And you can kind of correlate the economies of each country, reserve currency country, based on that diminishing quantum of their usage in world trade. And renminbi is obviously increasing because of China's trading relationships with the world. So when they weren't included in 2016 in the SWIFT system, they were actually China was partaking in it. They were leading. Bitmain was one of the largest miners of Bitcoin. Most of the ASIC miners come out of China. And then the China's trading volume, if you look in 2016, was massively from China happening back then. They, at that point, decided that, okay, Bitcoin is a competitor to gold, is digital gold, since you can't create gold in a lab like you can create diamonds. So they chose to go after they're the largest producer of gold. Officially, they have 3,000 metric tons of gold, roughly 2 to 3,000 metric tons of gold reported. That ultimately matters. The US has 8,100 metric tons. But unofficially through institutions, and these are US analysts that say this, China has roughly 38,000 metric tons of gold. Ultimately, in geopolitics, it comes down to when you're negotiating, whether it's war, whether it's trade wars, whether it's tariffs, it comes down to who has what amount of gold. That's the true asset, right? May not impact us as individuals, but this is at the power game's top level. So I think that was a major factor as well. Now, let's apply that to Pakistan. We have the same issue. Capital flight's going to happen. I mean, look, we're getting access to an asset that grows 5x against the dollar every 4 to 5 years, right? If you give people that access, why would anybody invest in the stock market, real estate, or pretty much any asset? I mean, if you're asking me, when people ask me, I'm like, in all honesty, it makes no sense to invest in any other market apart from digital assets, given the debasement today, even if you just see the outsized returns from Bitcoin. So the approach, in my opinion, the approach would be something like a gated exchange. I proposed this even in 2019 when they created different crypto roundtables in the country. And a gated exchange is very simple. You allow people exposure, and you can now tax it. It's in the net, but you allow people not to withdraw. So you can basically, it's a fiat link from your bank or wallet into the exchange. You can basically buy Bitcoin in rupees or move it to a stablecoin and buy Bitcoin, Ethereum, and all the other Solana, Avalanche, whatever you want to get, right? And then basically it's kept in the exchange in either cold storage or a hot wallet. And then when you want to basically sell it, you sell it and you get back rupees, right? So that would be probably the prudent approach versus just banning it all outright. And you still get the volume that's needed. That's probably the most logical approach that I see. Otherwise, it's a bear's asset, right? So it's like having gold, and you can just take it out of the country and smuggle it. In this case, it would happen digitally via wallet. And there's lots of decentralized exchange wallets that no matter what firewall we put up, and I think I'll point to one other thing that we're doing in Pakistan. We're implementing software that basically now does not level 0, level 1 KYC, which was for low threshold payments on your traditional payment wallets in Pakistan, the ones that are regulated. We're now requiring everyone to do full KYC. The problem with that is just going to slow down adoption in the short term. Right now, you want to bring people in the digital adoption. It's like it would be almost as if WhatsApp started charging money or started doing KYC for you to register. So WhatsApp's adoption would have dropped, right? But now that everybody's addicted or hooked onto WhatsApp, it's the number one thing most people look at when they get up in the morning, right? So it's a habit. So similarly, what we're trying to do, it won't work with the decentralized wallets and decentralized exchanges that exist also. So, from that perspective, you have to be careful. Lastly, I'll just tell you on the infrastructure side, look, this is more secure. People always come in, it's like when you talk about blockchain or crypto, people always have this reaction that it's like this fringe thing, right? It's not that fringe. The technology is more secure than the current banking system. While there's hacks, of course, it's money, right? But while there's hack attempts, it's still less than what happens in a lot of banking systems. And only reason why banking systems are secure is because they move so slow that it makes it difficult to hack with the RSA authentication, all that stuff, right, in real time. So I'll close it off to look, when you're storing your stuff in exchange, you can have it self-custody. There's things like Ledger Nano, or you can just do it in an exchange. So like, for example, Coinbase offers cold storage, and you can leave it there. Then there's multiple layers there's three-factor authentication effectively that's there, right? You have a separate, RSA code. You have your, obviously, facial ID recognition, email verification, and sometimes you can add a secondary approval there, right? So these things, there's lots of protection mechanisms that are out there, and you have to buyer beware, right? You have to select your chain. So just like you were downloading and consuming content or communicating, you could do WhatsApp, you could do Viber, you could do like LimeWire, not LimeWire, but Line. There was like 50 different iterations of this, right? So
Yes.
even crypto goes in the same direction, right? You have to study the use case. Okay, if I'm putting money in Ethereum, let me understand what it does. Solana, for example, it's a gaming and consumer layer. It's very fast, right? So it would work not for financial institutions, but for that layer. And Avalanche, you can just keep going on and doing analysis. I think a lot of people jump in out of speculation, thinking it's like gambling, but you have to treat it like an investment, and then it makes more sense and brings you returns.
Great. Thank you. This has been an extremely insightful session, and we are over the time, but I will still take the liberty of asking one final question to both of you. And if somebody has put that question up, and I'll extend it, I'll make it broader. And the question is that if Pakistan were to leapfrog into the future of fintech, what's the boldest step which you think we can take? And I want to extend this. So, what's your suggestion for the boldest step, both as a country and also at the individual level? So, for people who are watching this webinar, if we want to participate in the future of fintech, what do you think is the best thing we can do which can help us over the next 5 to 10 years? So, Hassan and then Faisal.
Yeah, no, it's a great question. So thank you for asking that. And Faisal, as an aside, I appreciate that you know the Coinbase stack as well as I do. So okay, I think the way I would just frame maybe the answer is that I think one of the things about like crypto and digital assets is that it's an ecosystem. It's very hard to say I want to have like this and this part, but maybe not this part. I think you have to kind of really take it on as a package. And so what I mean by that is I think the way to really think about like if you wanted to leapfrog, given that this is a transformative technology and we have a chance to sort of change our stature in the world, is I would have regulators or industry operators and developers really kind of take like a full faceted sort of approach towards opening up this industry. So on the regulation side, I would have neobanks that can be built on blockchain and stablecoin rails. So for example, like Nubank in Brazil, they have 170 million consumers in Brazil. All of their backend is pretty much settled on stablecoins now, and they're sort of crushing it. So I would love to see neobanks with like true banking charters, come out of Pakistan that can really just operate on blockchain rails. And then I think there's sort of this the adjacent kind of innovation economy around it of, you have a lot of great like Web3 talent in Pakistan already, but supporting sort of this industry in a more full-throated way by saying that, look, if you want to kind of, move your career into this, if you want to start building, we just do some kind of like policy goals around like increasing innovation and just the developer side, and I think you bring two or three of these pieces together, and it can look completely different in 3 years, and the conversation on like Pakistan and Web3 or even just kind of financial services can look and feel completely different from where we are today, where like global companies can start coming out because this is a, inherently global financial infrastructure.
You, Faisal?
100%. Yeah, so I think the moment just took place in terms of for financial inclusion, right, and fintech. Again, as I mentioned, all the fintech that we've been investing in Pakistan, was the downstream effect. The real reason the use case for all these fintechs was what's happening at the bottom, at the blockchain layer. And obviously AI as well from a credit scoring and also analysis perspective. So the moment happened, I got to give a hats off to Bilal bin Saqib at the Pakistan Crypto Council and the regulators in Pakistan. In my opinion, I would not have seen this happening for another 5 years, right? So the way it's happened, the pace with which we're adopting it, you're grabbing the bull by the horn. This is exactly what Pemra didn't do and PTA didn't do. And so I think you're going to see fintech accelerate like there's no tomorrow in Pakistan. You're having a fintech cycle start based on this. So it's great times.
Great times indeed. Thank you so much for your time. I learned a lot, and I'm sure so did the other people who are listening. And Hassan, thank you for that offer of following up with you and regarding if somebody wants to work on Base and work with Coinbase. And similarly, Faisal, I hope to see your fund more actively investing in crypto ideas and startups. And thank you for your time. Have a lovely day.
Thanks so much.
Thanks everyone. Take care.
Yes.
Bye.